Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I've got an interesting name for my top stock pick of the week, and it's, as you can see from the screen, it's Apogee Enterprises. APOG is the ticker. You can find it right there. It's a Zacks rank 3, and that gives it a hold, but I think we're going to see in a little bit that the 3, it's a little deceiving on that end. We do have an A for value and an A for growth in our style scores, and that's just tells us where investors are looking. So this has got a lot of things that a lot of investor groups like to see. So let's just jump right into it. We'll go to the next one. This is what I normally go through. We're going to start with the earnings history, and we can see this is on the detailed estimates page. But you can see it's been hit and miss, hit and miss, hit and miss. So really miss and hit over the last 4 quarters. But yet we still have a positive average earnings surprise of just about 20%. Last quarter came in super strong, 114% ahead of the consensus estimate. We love to see something like that. The question is, is that demand still going to be there? So what we then take a look at is the earnings estimates. And this is really what drives the Zacks rank. We can see 60 days ago, this quarter was at 69 cents, and it has moved down, and it's now 67 cents. So that's kind of a negative there. But we can see that has, more than taken care of itself in the next quarter here as it moved from 68 to 71 cents. We see a 1 penny increase for the current fiscal year. And then next fiscal year, we can see estimates moving from 243 to 256. So all in all, those are earnings estimates moving up, which kind of makes you go, why is this a Zacks rank number 3? As we go, if I scroll up to the top of the screen and I get rid of all my nonsense there, you can see that it is a Zacks rank number 3. And the rank will tell us when estimates are moving higher. These estimates aren't moving high enough. There are a lot of other estimates that are moving up a little bit stronger, that they don't have that one downtick there in this estimate here. So that's kind of the reason. But at the same time, I still like this stock, and I like the idea of being in this one. And for one other reason I'm going to explain later. All right, but let's jump right to the valuation here. We see 12 times forward earnings, which is pretty low considering the market's normal range for forward PE is in the 17 to 19 times. Growth contracted on the top line in the most recent quarter, but we are looking for low single-digit growth in the next fiscal year. All this has ended up with a price to book of 1.4 times, and value investors love that because they love any number there less than 3 times. I like to see the price to sales at 1 or more, so this 0.59 is not that great, not what I want to see. But I do like how margins have increased in the last couple quarters, and I know there's only a couple basis points, but it's showing the right overall direction, and that's what we'd love to see. So let's take a look now at the chart. And I thought I had that lined up. Sorry, I don't. Okay, so obviously the stock has come in significantly from about 3 years ago. It's been down, but I think that the real pattern that we should be looking at here is this. The most recent, after this big beat, the stock came down in the crash there. There was a nice big beat, which helped it recover a bit. There was a miss that kind of slowed everything down. And now we've seen a recent beat, here. But on Friday of this week, and it is December 18th will be Friday. It will be earnings day for APOG. We'll get to find out what the last 60 days, 90 days has been, and then you also get guidance going forward for the next year. So I like how this stock has performed of late. This is a building construction name, and I think those names have been seeing a lot of positive developments here lately. So I really like this one, and I'm going to be watching this earnings very closely. I don't know. Well, let's check right now. Let's see if there's a positive ESP on this. Okay, so there isn't. An ESP just tells us if the most recent earnings estimate revision has been above the consensus or if it's right at the consensus. So it looks like it was right at the consensus. But at the same time, I'm looking for Apogee to beat on Friday, and I'm looking for that stock to move higher. So that's my top stock pick of the week. Now let me throw it over to Nina Mishra.
Thanks, Brian. My top pick today is Target, ticker symbol TGT. And I'm doing Target today because the holidays shopping season is very important for retailers. And this year, some retailers will do very well, much better than others, because the pandemic has transformed the way we shop. And retailers that have invested in their e-commerce operations, because now people prefer to shop online, a trend which we have seen in the past few years and which has been accelerated by the health crisis. And the big retailers also provide one-stop shop. So retailers like Walmart, Target, Home Depot, where people can go and buy a lot of things in one shopping trip, they have been doing quite well. And obviously, Target has also benefited from some of the changes that it has made in the past 2 years or so. For example, Target has remodeled its stores. It has launched smaller store formats. Recently, they introduced mini Ulta beauty shops in their stores, and they have launched many other exclusive brands too. They have cut their prices, they have improved their supply chain, and also introduced same day shipping and same day store pickup. So all those measures have been helping Target a lot, and that is what we saw in the recent quarterly results too. The results were much better than expected. The company beat both on the top and bottom lines, and in fact the comp sales, they were up more than 20% in the quarter, and digital comp sales, they more than doubled during the quarter. So obviously the stock has also done very well this year, but the company continues to gain share. They have been gaining market share in some of the important categories, including electronics, home goods, apparel, beauty. So all these are going to help the company and the stock going forward too. Now let's take a look at some of the charts by going to the code page on Zacks.com. So Target is a Zacks rank number 2 by ranked stock, and it has got quite decent scores, style scores too. B for value, A for growth, B for momentum, and A for VGM. Now, if you go to detailed estimates, you will see that 12 analysts have raised their estimates for the current and next year, that is after the recent quarterly results, because the results were much better than expected. And in fact, if you go to the price consensus and EPS surprise chart, you will see that company has been doing very well, and they have been consistently beating their estimates for the past 2 years. That is since then, since Target introduced all the measures that I mentioned, the strategic measures to help their business, and which kind of transform the company and its stores. Now, another reason why I like Target is its dividend yield. It is about 1.6% recently, and Target has in fact been consistently raising its dividend. Just in June this year, they raised their dividend by 3%. They have also been buying a lot of shares, so all those measures have been helping the Target stockholders. And as I mentioned, it is a Zacks rank number 2 stock, so definitely worth a look. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and we will see you next week.